Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a great day. Taking a quick look here at Bitcoin. Boy, struggle bus, huh? What's going on? Yesterday we were retesting 68,000. Now we're at the low 63s. This is getting pretty ridiculous. Either way you look at it, we're going to double check a couple of things here. We had a nice little cup and handles slash bull flag pattern, broke down, continued lower, lost support there at roughly about 65K, and obviously now we're down below the clouds. So we're going to talk about this scenario here. It's not great. Is it terrible? It's hard to say, honestly, but from the outside looking at it, it doesn't look fantastic, but we're just going to have to double check a few key factors, really see what's going on here. We're going to jump into some back-end data here. Go ahead and get this reloaded, and in the meantime, please hit the like button before we get started. Deeply appreciate that. Helps grow the channel. Comment below too, of course. Those are also very helpful tools. But generally speaking, let me know, what is your position on Bitcoin? Where are we at with that? If you want to know and learn more, cryptocash.tech is a site linked down below. If you want to become a better trader, Trading Academy, community, and Signals group. Been a very, very awesome experience. Thank you to my community for just being awesome parts of my life. You know who you are. Thank you. Okay, so foundationally here, where are we at with support and resistance? I mean, keep in mind, these levels are not support and resistance exactly. It's just that liquidation tends to occur at support or resistance levels. So keep in mind, we got a heavy amount of liquidation at 60,700. We've talked about that low 60K range being somewhat of a support. And of course, hypothetically, potentially getting a second bottom or a bounce off that level would be great, just so we can get some extra fills in our long positions. But either way you look at it here, you know, all spot bags aside, there's a heavy amount of liquidation, of course, at 68,000 upwards of 70,000. It was expected for that level to get swept, especially with that bull flag pattern breakout. That didn't happen, but once again, a lot more liquidity above the price action than below, just to kind of keep that in the back of your mind. Does that imply the price is going to shoot up now because we've hit our bottom? No, not at all. No one truly knows where the bottom's at, and in fact, it's proven to be illegitimate with some of these tentative bottoms that we've been seeing here lately. So let's talk a little bit about the daily and work our way down. We'll review this weekend here, the weekly, etc. But generally speaking, the weeklies, there's a shift of momentum with the stochastic and MACD kind of letting us know we're losing momentum. Big surprise. But most other moving averages, etc., are still looking very strong. So we cannot presume the price is going to drop. But again, worst case scenario, I'd say low 50,000 range is a worst case, just based on previous closures. We've also got key level Fibonacci retracement levels at that 52,000 range roughly. So I would say that 52K would be a best case scenario for us to get a nice strong bounce off that level. Again, if that happens, don't walk away from this saying Crypto Cash said 52K is inevitable. No, it's just a possibility and or probability depending on how things work out here at 61,000. So let's talk about moving averages, of course. We discussed this yesterday, but being below the 20-day SMA kind of just lets us know that we haven't broken bearish, but we are still in a situation where it's not like just blindly bullish, right? You can't just go long on every single coin and be okay anymore. Generally speaking, at this point, when we're at this level, that level is accumulating about 67,600. While we didn't quite get a rejection off that level, we kind of did too. So we can presume that 67,600, that 0.382 fib level we talked about previously, is somewhat a resistance level for us right now. Okay? We've also got a strong amount of volume there too, 67,200. We can presume we're going to have some resistance if we retest that range here in the relative near future or later. Okay, so just keep that in the back of your mind. That's somewhat of a point of contention. We take a look, of course, at some other indicators here. We can see we're tentatively losing 50 on the RSI. Keep in mind, this is tentative. The candlestick hasn't closed yet, but generally, that's not a great sign. And we don't want to get below that level. We peaked below that level a couple days ago, and then the day before yesterday, or yesterday I think it was, we had a bullish engulfing candle, and then the price action pulls back. So we've seen a lot of tomfoolery, okay? Shenanigans, whatever the term is you want to use to describe it. Price going down, up, etc. A lot of nonsense stuff that doesn't really need to be happening, but it's just whales playing their game and we're caught in the crossfire. So the key is to not get caught in the crossfire and be careful with your trades. We've hit 3 out of 4 of our targets so far this week with our swing trades. One is still open for Solana. I'm going to look at that next here to kind of identify where we're at there. But generally speaking, things don't always go the way you want, right? The key is to minimize your loss, maximize your gain. And that's essentially what we like to do as a community by securing profits when we can. And I recommend the same thing for you too, because if you're holding on for dear life, that's literally what you're going to be doing in this market, and it doesn't make a ton of sense. Secure profits when you can. Money flow index is pulling back, stochastic swinging up. This is somewhat of a, letting us know that the shift in momentum is trying to come up, but it hasn't. I don't really trust stochastic RSI on this the daily time frame. 4 hours a little bit more telling, and I'm willing to speculate we're getting a divergence on the 4 hour too. So anyways, you look at it here, there's not a lot of bullish signs and generally speaking, the overall sentiment here is slightly bearish. This is very disappointing though. Of course, seeing these two red candles like this, following a bullish engulfing candle, majority of the time you get a bullish engulfing candle like that, leading into a bull flag, it takes off. So whatever. What else can you say here? That's just the whales probably seeing that and being like, oh, no, just kidding. We're just going to go ahead and destroy a bunch of accounts. So just kind of common in the way it goes. That's why liquidity is an important thing to look at. In fact, I didn't take a peek here. I'm curious about the last 12 hours. If we have anything above or below the price action. Looks like there's a pretty solid amount of liquidation above the price right now with very little below. So 62.5 is that lower level. 65,000 even has a heavy concentration liquidation in the last 12 hours. So keep in mind, we could see a run up towards 65 again, just whale games, seeing if they can just destroy everybody in every single direction. All the more reason, folks, though, to use low leverage, low position sizing, because if you do use low leverage, for example, these ebbs and flows aren't going to be as catastrophic as they would if with larger leverage. In fact, if you insist on leverage, go ahead, of course, but just ensure that you're using low position sizing, all right, so you don't get destroyed. But alternately, maybe just consider using spot and don't worry about leverage, because leverage gets a lot of people in a lot of trouble. And unless you are a refined trader, leverage can be very problematic. Take a look here at the 4-hour time frame. This is mostly bear town. We've lost 50 on the RSI. We were breaking above 50 on the RSI yesterday when we took that long position with Solana. And we can see, of course, the divergence, so to speak. We've diverged below 50 on the RSI, stochastic swinging down, and money flow index coming down with it. Never great signs, right? Low money coming into a coin, more likely for downside. We've also got a MACD divergence here. And just to give you perspective, the last time we diverged, the price did one of these here. So hypothetically, we could see a carbon copy of that to see a retest of this lower level of 60,000. Okay? It's just, again, strictly hypothetical, folks. Is that a guarantee? Absolutely not. But once more, when we had a divergence last time, just to clarify again, it was roughly from top to bottom a correction of about 10.5%. We do something like that here again, roughly what, 10.5% from our current divergence. That would put us in the 58K range. I'm just throwing it out there. I don't think you should attach yourself to that. There's a lot of things that need to happen, I think, for that to confirm. But generally speaking, MACD divergences lately have been carrying a little bit more weight than the convergences. It's the divergence that's a little bit more substantial. Again, we haven't established higher highs or higher lows yet. If we do end up pivoting here off 63.5 today, for example, that'd be awesome. If we did, that would provide us with a higher low, and that would give us a chance to be able to continue higher up, starting a new ascending trend. But we still have yet to establish an ascending trend. You could argue that this was an ascending trend, but the truth is it didn't hold for very long, and I prefer to use larger time frame trend lines, if you will. So at this point, nothing really to brag or write home about. We do have the 200-day SMA holding in place at roughly about 62.5. So I would say staying above or maintaining above the 200-day SMA is extremely important. That would keep us above this larger time frame trend line and keep us in the overall direction we want to keep heading. Staying above the 50-day SMA on the daily, etc. Those are all positive things here. Okay, so truth is we're below a lot of moving averages and it's not great conditions here. So I'd just be cautious and careful taking longs right now. If you were, keep them tighter, so to speak, and pay attention to them. Don't just let them ride and hope for the best. Hope has no bearing in this market. It has no place. There is no such thing as hope and crypto. Those two things are extremely they're not synonymous. We'll just put it that way, right? They run opposite of each other. Okay, enough about that. Last thing but not least here, of course, is our good old Ichimoku cloud kind of confirming we do have a bearish divergence here. Conversion lines below the baseline, lag and spans free and clear, and we're underneath the cloud pretty solidly. So having said that, closing above 65K would be paramount. That would really put us back on track. We need to be back over that 65K mark to be moderately bullish. Again, we had that same thing happen here. We were over 65K, feeling pretty good, and of course, the whales had a different agenda. So it's not a guarantee even if we get back over 65. It would just be very helpful. That would put us over 50 on the RSI on the daily to keep us safe in that regard. We'd be up over most of our moving averages, and we have a lot more chance of the price going up than down. But for right now, we can presume the price could continue lower. If we take a look at our volume profile for the last, just say, let's go from the first of the month here. This is roughly the first of the month. We see a tremendous amount of volume at 67,000. Once again, that resistance at 67K. All the more reason why that long we took yesterday seemed pretty appropriate considering the condition of the market. We were back over that volume profile. Things were looking great. At this point here, complete fake out, for lack of better terms, and now we're diverging. We zoom way in, just say in the last, this would be the last week's worth of trading. We can see there's a larger accumulation of volume from this most recent downtrend at 63,000. So we do have somewhat of a support there. It's very minor, and I would not attach yourself to it. This 0.618, basically, this is the golden pocket, for lack of better terms. We can see roughly 63 to 63.5 as that potential support range that we're testing right now. So if we hold here and bounce, we could establish higher highs and higher lows moving forward and break this trend. Truth is, leading into the weekend, we want to be at 65K or higher to kind of see where we're at. But truth is also, a lot of this depends on, Bitcoin dominance and how we're going to be moving into the weekend with this here. So we're going to have to pay attention to Bitcoin dominance leading into the weekend, kind of see. For right now, Bitcoin dominance is coming down and alts are coming down for the most part. It's generally a bearish sign. Again, the sign isn't bearish because of it. It's just that dominance is responding to that bearishness, showing us that there's a lot of weakness in most altcoins too right now. So just for the simple way to understand it is until we find our bottom and Bitcoin can bottom out, we have no reason to consider long positions. Congrats to our community members for some nice profits on Filecoin. We got that nice little pump there, of course, but again, consolation at this point. I hope that you learned something here today. Thank you so much for watching. Obviously, if you're new to the channel, jump on over to Bitunix, phenomenal exchange, link down below to register. Use my link to register, you get some nice healthy rewards there. They're really cool, and they've helped our community a lot with no KYC or VPN. I hope you have a great rest of your day. Thanks again. Comment below, like, subscribe, follow. Deeply appreciate you. We'll see you in the next one. Take care.